last week we have discussed that it's been one of the most memorable momentum we are witnessing in the markets, and what a volatility we had last week, and in the last video as we had discussed. So last week the momentum prolongs, volatility continues into the market. We are now witnessing some of the black days frequently. So yes, in today's also we have seen Mondays, we have seen a lower circuit in Indian markets. Market halted for 45 minutes, back opening with a negative bias, and we think this momentum would continue on the downside on the Nifty. Even if you look at the S&P trading at around Monday, it had again a black Monday with the lower circuit hits, trading around sub 2200 on the future side. So with the opening on the negatives, we might open on a negative side on S&P. Nifty is already trading at around more than 10% down in the Monday session, back to around sub 7800 levels. So last week lows of around 7834, where we have seen a huge recovery back to around 8800. So nearly 1000 points rally from the lower levels, and back 1000 fall this week. So we think volatility would continue, and in last 2-3 weekly videos we are regularly suggesting avoid leveraging as of now, and we think this is a good time to go long from an investment point of view, because we have seen stocks been trading around 40-50% down from their higher levels. Even the large cap, if you look, are trading at below 40-50% from their higher levels. So we think one should slow and steady start to build up their portfolio in a staggered manner. I would not say go out of one shot, but one should look in a staggered manner. I would not say that worst is over for markets. We think worst is still there, and we probably might see around 10-15% more downside, and we are expecting up to around 6800 levels. But looking at the stocks, we don't think that one should look for a finding a exact bottom in the stocks. But yes, one could at least invest around 5-10% of their portfolio amount which they were planning to invest, and we think one should recovery could be a very faster in the coming, I would not say coming weeks, but coming months. We might again see this basing formation to happen. Just look at the intermarket, the charts on your screen. So before that, I will just indicate that what are the colors the lines are. First, if you look at the blue color lines, it is S&P 500 monthly, and all these are the monthly price we have taken it. The green which you see is commodity CRB index, 0,000 Reuters commodity index. The purple which you see is the dollar index charts. The orange which you see is the gold chart, and the red which you see is the Fed effective Fed interest rates. Just to look at the sum up, just giving a glance. When if you look at the times Fed had interest rate cut aggressively, cut their interest rate, Fed the interest rate when they cut, we have seen that huge correction in S&P 500. Commodity index tends to make a big tops and fall aggressively. Gold see a huge comeback, which we have seen in 1999 to 2001. Similarly, 2008 2009, we have seen when Fed has cut interest rate, we have seen a gold rallying as a part of safe haven buying. Similarly, if I just look at this scenario right from 2019 mid to 2000 the current levels 2020 March, gold has seen a strong comeback, and if I just look at the momentum, we were trading around 1300 1330, back to around 1700 levels on gold. So which gold has seen a whooping rally. Yes, in last couple of weeks we have seen some profit bookings coming out from the gold side, which has now dipped below 1500 from sub 1700 highs. But we don't expect that the gold rally is over. We think gold can come back again, because if this scenario of the economic crisis continues, the safe haven buying generally tends out to be in the gold. The most important, if you look at the dollar index on the chart, which is the purple in color, when Fed interest cut the interest rate, commodities are down, commodity index is down, gold is trading rallying, stocks are down, or equity indices are down. Dollar index tend to see a huge rally, and we have seen similar structure in 1999 2001, 2008 2009, and generally this currency war continues. and the dollar index trending at around 103, which is nearly 2.5 3 years highest level. I guess in 2017 we have seen such levels, and after that 103 in 2020, which is nearly 2.5 3 years highs. And we think this dollar index momentum would continue towards 106, 106 and a half on the upside, which means sorry, which means that the commodities, especially energy and base metals, would continue to drag on the downside. Gold would continue on the upside, and equities would continue on the downside. So we think one more quarter pain would be there, looking at the economic moment, economic crisis which we are facing. We have clearly seen from US, we have clearly seen from UK, we have clearly seen from China, we have clearly seen from other countries. Even if you look at the government which is buying, doing quantitative easing, or which like if you look at the US started with $500 billion, $400 billion, $1 trillion. Europe came with the rate cut, $750 million of QE. BOE, Bank of England, has come up with the rate cut to 0.1% now. And even if you look at the India, we have been intervening in the currency market for 1 lakh crores. Yes, quantitative easing is going on across the world. Rates are being cut. We haven't seen a rate cut from the India yet, but we have seen that Mr. Das has clearly indicated that if it's necessary, they will take a steps. But as of now, they think it's not necessary to cut the interest rate, and we would have to watch for next monetary policy when the rate cuts are being coming. But yes, economic problem would continue, and we think for another quarter markets might remain under pressure. We are expecting back to around 68 6900 levels on Nifty, and yes, I would suggest, still suggest, but buy large cap stocks in a staggered manner. At least invest 5% 10%. You never know if the coronavirus drug is out and it's free, easily available. We might see economic recovery very fast. And if you look at the Chinese commentary last week, they have clearly indicated that the economic, they are planning, expecting that economic recovery would be very faster in China. And if that turns out to be on a stronger side or a faster side, we think the stance might change on a positive side for equity markets also. So I would say invest in a staggered manner, and I would again repeat that this markets might see under pressure, looking at the economic crisis and looking at the dollar index, looking at the gold commodities index are falling. So and investment could be on a staggered manner side. So thank you. Stay safe. Avoid, coronavirus has been spreading aggressively, so I would suggest avoid being in a group, and that could be the best, safest thing one should look at. Thank you.